Welcome to Cambridge House Live. I'm Bridget Anderson and I'm joined by Ian Mclelland, who is the Managing Director, North America and partner, Proactive Investors. Nice to see you.
Thanks for having me.
Let's talk about the juniors right now. What are you seeing happening in the junior mining section?
I think it's a very, there's a very kind of split personality going on here. I think what we see here in Vancouver is a lot of the juniors here have been struggling for the last almost 2 years now. The markets for the juniors, the TSX Ventures had a significant pullback. It hasn't really recovered, so they've been struggling to raise money for a protracted time.
Yeah, 2012 was a pretty rough year.
It is a very rough year for them, and it doesn't necessarily look like it's going to get better in the very near term. So there's a kind of emphasis on conserving your cash, really tightening your belts and battening down the hatches kind of mentality. I think if you look at the junior mining sector outside of Vancouver, and particularly if you look at London and Sydney, where the other two major markets for junior resource companies, it's a slightly different take. They're still raising money, maybe not as much as they could before, but they're still able to raise money. Maybe they'll have to get a little more creative on how they raise the money. I just think their attitude seems to be a little more positive. They're still wanting to get actively out there, drill their projects, move things forward.
So what are you seeing then for 2013? What are some of the trends that you're really keeping an eye on?
I think, here in Canada, one of the biggest things that we like to keep an eye on is how many financings are being announced, what's the size of the financing, is that financing closing? So I actually pay a lot of attention to what the bankers are saying. I'm in Toronto, so we obviously are in contact with a lot of the Bay Street guys on a regular basis, and you speak to them in the bars after work, and what are they hearing and what are they seeing? Definitely paying attention to that, and I haven't heard anything particularly positive just yet.
So do you think there are a number of factors that are holding the junior mining, the whole sector back, or are we talking about really one or two things?
I think it's a combination of two or three things. So there's, I think a lot of, the whole market has moved away from the risk capital, as they would call it, for the smaller end of the market. And that risk capital is what these guys, juniors, rely on, because they're not cash flow generating. They rely entirely on the markets to advance. They've obviously struggled, like everyone has, from the Euro crisis and the fiscal cliff. All this attention is focusing on those big, subjects, and that tends to, people don't like an uncertainty in the market. That keeps them out of the riskier assets as well. I think the other big thing we've seen is that there's just been this general kind of restructuring in the fund management industry as well, where they've been seeing redemptions. They've had difficult years, so you've got this cycle of large funds, some out of San Francisco, some out of New York, that used to be, $3, $4, $5 billion funds focused on the resources sector, and now they're $1-2 billion funds.
So are you seeing the situation? Let's start first with the U.S. and we're, talking about debt restructuring and that whole we're over the fiscal cliff, and now we're dealing with the debt ceiling. Do you see that situation resolving itself in the near future?
That's a tricky one. I don't, actually. I think the politicians in the U.S. seem to be very good at arguing and not a lot of anything else. Obama seems to be trying to do everything he can, but there's just such a split there between the Republicans and the Democrats. And, you can see they're already looking to 3 years down the road, and Obama's going to be wrapping up. And do they want to give him anything now that may hurt their chances of the Republicans coming in and being the next party in charge? So
given that situation is probably going to keep percolating along, what are some of the things that will help turn things around for the junior miners?
I think with the junior miners, I think the biggest thing they can see is very strong, supportive, buoyant commodity prices, because obviously the underlying commodities, that's a primary driver for them. If we see, I know there's a lot of people predicting gold at $2,000 or $3,000 an ounce. Sure, that's going to be great for gold juniors and gold producers, absolutely, but it's all the other commodities as well. So I guess if you're in the junior mining sector and you want to see a structurally weaker U.S. dollar continuing to get weaker, because that's obviously good for commodities in general, and you want to see probably China demand picking up, because obviously there's a lot of sentiment involved in that as well, that we want to see China growing faster than predictions, not slightly slower. You see there's still a fair amount of growth, though, to come from China and from some other of the Asian countries as well. Absolutely, yeah, absolutely. I think, you've got, they talk about the BRIC countries and Brazil and all this kind of stuff, but really China is the one that, you just look at the last 5 years, what's the market's been focusing on, and China's getting more and more of that attention, and they are certainly underpinning that global commodity demand. And actually, if you look at the Australian market, part of the reason the Australian stock exchange has done comparatively well compared to the Canadian exchanges over the last few years is because there's still a significant amount of capital coming into Australia from Chinese investors that want to export all of those raw materials back to China.
You said an interesting thing about perception about the markets. You know, you have spent some time in London, and so people in London and in Europe are used to what's going on with some of the crisis in Europe. So when it comes to North American investors, how much of that should they be listening to, and how much of it is noise?
I think a lot of it's noise, actually. And I think, you know, the press are very good at creating headlines. They want to capture attention, and you know, bad news sells, and all that kind of comes through. I think if you know, I go to the UK on a regular basis, spend a lot of time in London. We have an office in London. We communicate and talk to a lot of British listed companies, directors, investors, and the attitude over there is very, very different. You know, yes, their portfolios have been hurt, but they are very much still active in the market. And I think, yeah, I lived in the UK for 12 years, and you kind of get used to the bad news because it's always bad news coming out of Europe. There's always structural issues. There's always strikes in France. There's always high unemployment. There's always a significant amount of debt. So that hasn't really changed a lot. So from them, when they see the news about, you know, what's going on in Spain and that, it's kind of like, oh, again, you know, this is nothing new to them. They're used to seeing that kind of news. Whereas over here, it was very much treated like this. It was like a laser focused on Spain, Portugal, Greece, and what happened in those countries. Those are still very small countries when you look at the powerhouses like Germany, which is still in very good shape.
So given the kind of global exposure that you've had, how do you determine where the opportunities are? What do you use to evaluate them?
I think I'm a big believer in management. When you're looking at junior companies, it's you know, the first thing you got to look at is the management team. What's their track record? You know, it doesn't guarantee success, but it certainly improves the odds if you've got a management team that had been there, done that before. I think the other big thing I always look at is, you know, that management team, what are they doing out there in the market? Of course, they're going to be budgeting a significant portion of what they raise for drilling, but you know, where does the rest of the money go? Really look at how much are the board of directors paying themselves, you know, because it can be surprising sometimes when you look through the annual financial report.
CEO compensation,
Absolutely.
definitely an issue that investors are keeping a closer eye on now.
Definitely. And you look at all those options that they're issuing themselves as well. Where are they pricing those options? Are they repricing options or trying to reprice options? I think all those things you need to look at. And it's, yeah, I would laser focus on the management and the structure around that management team as far as how they're compensated for performance.
So going back to the resource markets, I want to talk a little bit about some of the things that investors should be watching for in 2013. Something that's been talked about a fair bit over the last couple of days is consolidation, really seeing that as a theme. And within that, there are opportunities though too. Yeah. Would you agree with that?
Yeah, I would. I think you look at, there's a lot of companies out there that have been acquired. I think Prodigy Gold being acquired recently was an interesting one. The deal that Fish and Energy announced a couple of days ago, where they basically they'd raised around $8 million, I think it was, in total, and they really raised that off the back of their flagship project, which was a good thing to do. It's difficult to raise money if you're a uranium company, but they raised that money, and then as soon as they finished raising the money, they sold that project to Denison for stock. So now they're going to own 11% of Denison, but they kept all the cash for their remaining projects. So very well played. That's how you got to be creative thinking and how you get the company ahead in the way you need to. And yeah, I think M&A activity is always a big theme. And how do you pick the ones that are going to be acquired? Very, very difficult. I think, you know, at the end of the day, they have to have significant, well-developed assets. That if you're a major, why would you want to buy that? And I think a lot of that comes down to cost replacement. So you can look at a lot of even the junior producers, how much did they pay to build that mine and put it into production? And what are they trading at now? And if they're trading at a discount to the cost to go into production, if you're a mid-tier producer looking to bulk up, that's the kind of thing you're going to look at, because you're thinking, well, I can buy this company I can make an offer for $200 million, and I know they've already put $300 million in the ground just to get to where they are. So it's actually cheaper for them to acquire you, and maybe especially if they're acquiring you with their own paper, right, than to go and build a mine of a similar size in a similar jurisdiction on their own. So definitely look at cost replacement. I think that's something to look at. Any jurisdictions that you're really hot on right now? I think Ontario, I have to say. I'm in Toronto, so...
right there, straight to the heart,
yeah,
right?
Absolutely. We've seen a lot of interesting deals being done in Ontario. I think at the moment there is quite a strong aversion to risk, for country risk as well, and a lot of the countries in South America have really fallen off the kind of A-list in the last year, and that isn't helping companies that are in those areas operating. So I think, jurisdictionally, having a safe jurisdiction, Ontario is a very good jurisdiction, so is British Columbia, absolutely. In fact, most of Canada is fine. Parts of Europe are, can be a bit bureaucratic, but as far as security of tenure, you're fine. Australia, of course, is a great jurisdiction. I think pretty much the rest of the world, you've got to weigh up, how much risk do you want to take on that? And it's very difficult when you get into West Africa, North Africa, predicting the future with those places, because it takes one election and things can change very, very quickly for those companies. And that's part of the risk you have to take when you invest in those parts of the world. It's all about risk reward.
It really is. And before I let you go, I want to ask you about Proactive Investors. You founded it in 2006, so tell me about why you did that and a little bit about it as well.
Yeah, I actually started the business out of anger. So I've taken some anger management classes since then, but it was
sounds like that's an entire story on itself.
It could be, absolutely. But it was pure anger. I was a full-time investor for several years, and like a lot of the people at this show, I used to go to trade shows, I would go to the conferences, hearing the CEOs, trying to do your own due diligence, learn your companies. But what I found so frustrating was that once I'd done that, I could go online and I could find absolutely nothing on that company would exist. Maybe behind a subscriber wall, but I didn't want to pay for a subscriber service. Mm-hmm. So it was like, well, how on earth do you find out what these companies are actually doing? And probably the most frustrating thing is, you own a company, you've met the management, you love the company, you're in it for the long term. They put out a fantastic press release and their stock price goes down. And you wonder why.
Yeah, I mean, if
right?
you're invested.
Yeah.
I mean, not only financially, but emotionally as well.
And how do you find out? Well, you go on Google or something like that, you type in their name, and you hope that something comes up somewhere on Reuters or Bloomberg or saying why. Yeah. Was the market disappointed with that? What was it? And unfortunately, you don't get that. It doesn't exist. And I understand why Bloomberg and Reuters doesn't cover this end of the market. But I just found that very frustrating. So I built Proactive to provide that why. That when a company does put out a press release and they are moving, we actually have got we have 20 journalists within our group, and we will write about that press release, what it means, phone the CEO up, get some quotes from him. If there's analysts following the stock, we'll call the analysts, get their views, and put out something. So when you go to Google that company that day, you'll find out why.
Excellent advice and insight too. Thanks very much, Ian. I appreciate your time.
Thanks for having me.